Hello, good afternoon. My name is Angel Pastrana. I'm going to be doing the presentation here for the Great Recession of 2008 and 2009. Within it, I'm going to be discussing some causes, three causes of the recession. I'm going to be also talking about the Economic Stimulus Act of 2008, some changes to the U.S. economy that came from the Great Recession, and some policy proposals that will help strengthen our economy to prevent future recessions as well. So with that, let's go ahead and get started. So some of the causes for the Great Recession, they did vary, but one of the biggest ones was that the banks were creating risky mortgage-backed securities, also known as MBSs. An MBS is pretty much a investment that's similar to a bond that is made of a bundle of home loans bought from the bank that issued them. Investors in MBSs receive periodic payments similar to bonds, coupon payments. This was a red flag during the Great Recession because mortgage-backed securities, they're only as sound as the mortgages that back them up. And the MBSs that the banks were writing out were not the most secure. They were very risky. And this came as a result of subprime mortgages. Subprime mortgages are the second cause out of a huge amount of causes for the Great Recession. But to describe to you what subprime is pretty much when a bank writes a mortgage to individuals that will not normally qualify for a loan that have very little to no income. In other words, these are loans that are written out to people that have FICO scores between or below 640 to 600, with the minimum when the minimum FICO score for mortgages has been about 680 for quite some time. These typically came with higher closing costs, higher interest rates, obviously because the customer is at higher risk of default. One of the main abuses that came out of these subprime loans was predatory mortgage lending. Because of these subprime, many people were able to qualify under these pretense for a mortgage when clearly they were not able to afford it. So what the banks were doing, they were doing CD swaps. Essentially what that means is that they were doing the MBSs, but requiring people to purchase a particular insurance which was going to protect the banks in the event of default, which was highly likely from these individuals because they clearly could not be good on their agreements. And another thing that came out of this was that there was many people that could not afford a mortgage that ended up having multiple mortgages going on for themselves. So some people might have 2-3 mortgages going on. To move on to the next thing here, another cause of the Great Recession was fraudulent activity from home mortgage originators, such as deceptive activities, ninja loans, and jumbo loans. The way that there was deceptive activities here was that many times there was a lot of information that was withheld from the borrowers, such as loan terms and eligibility, add-ons, or balloon payments. A balloon payment being that all of the payments were interest only, and at the end of the term, the principal was due, which was typically going to be a huge lump sum. This is the reason why a lot of people had multiple mortgages. It could have been that they were paying interest-only payments of, combined of, like, let's just say 3 mortgages for $1,200. So they were doing $1,200 on 3 mortgages, and then at the end of the term, boom, you owe us $800,000 each. So that's what a balloon payment is there. The ninja loans were given to individuals that had no income, so no job or no assets. There's a film called The Big Short, which clearly describes what this is all about. I remember correctly, there was an instance where the protagonist was met with exotic dancers, and they told him that they had multiple mortgages out. Exotic dancers they work for cash. They don't typically report any income. Therefore, like I said here, ninja loans are given to people with no income, no job, or no assets. Lastly, we have the jumbo loans here, and jumbo loans we still have these around. These are typically given out to luxury homes, which come with high affluent clients. But these were given out by the banks to people that clearly did not qualify for them. Knowing this, the bank also did look the other way and created MBSs while misrepresenting the quality of the loans to remove themselves from their total risk. To go ahead and talk about the Economic Stimulus Act of 2008, This was an economic stimulus act, which was it was there to provide tax rebates for individuals ranging from anywhere from $600 to $1,200 plus $300 per qualifying child. They were phased out on the annual income of $75,000 or less for single people, or $150,000 for families, and it was reduced by 5% for anyone that exceeded the threshold. This was very similar to the current CARES Act that we have all seen over the last year due to the pandemic. The only exception here, or differentiator here, is that the CARES Act was directly distributed to individuals through direct deposit or debit cards, when the Economic Stimulus Act of 2008 was given as a rebate at the time of taxes. Now, some of the changes that to the U.S. economy that came from the Great Recession was, just federal intervention. The feds intervened with the private sector, reversing a lot of the damage that was created. Out of that, came the bank bailouts, along with the Recovery Act, which is also known as the Obama stimulus, which consisted of $831 billion in tax cuts, credits, and unemployment benefits for families. We also saw the TARP Act, which is also known as the Troubled Asset Relief Program. It was created to stabilize the country's financial system, restore the economic growth, and mitigate foreclosures in the wake of the 2008 financial crisis. Introduction of these two acts, the Recovery Act and the TARP Act, we did see a jump in the economy as it was, just surging downwards. It started to, start to escalate up towards trending in a positive direction as well. So these were really good changes to the U.S. economy to help reverse the recession. Lastly, some policies and proposals that will be good to help prevent future recessions. I believe that the Supplemental Nutrition Assistance Program, formerly known as SNAP, which is for the food stamp program, along with temporary assistance for needy families and the unemployment insurance, are proposals and policy proposals that need to be adjusted and amended throughout the years, just to help prevent these financial crises from happening again. The reason why these are so important is because when in the time of recession, the group of people that get hurt the most are the ones that are at the poverty line. So these are all going to be very essential to help mitigate future recessions. I want to thank you guys all for your time. If you want, here's some references that I got where I got all my information from as well. Thank you.